makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Bloomberg has learned that Nvidia and AMD have agreed to pay the U.S. government 15% of revenue from Chinese chip sales as part of a deal to secure export licenses. Now, the deals with the Trump administration come as the president prepares for a summit with the Russian leader, Vladimir Putin, in Alaska on Friday. In a moment, we'll get the market view with Subitha Subramaniam, head of investment strategy at Sarasin and Partners. But first, let's dive into those top stories with Rosalind Matheson, our EMEA news director, and Susan Lynch, our Brussels bureau chief. Ros, let's start with you. Nvidia and AMD agreeing 15% of their revenues in exchange, basically, for export licenses. Is this really a new way of making business with Donald Trump? Is it financial payout for trade concessions?
Well, it's certainly very unusual, to say the least. So this would be them paying revenue from their AI chips specifically sold in China. And it's not actually a ton of money, at least for now. These are chips that also Nvidia is seeking licenses to start shipping again to China. So we're not talking about masses of money, but it is an unusual approach to essentially say you're putting an export tax on specific companies. And so you're going to take a slice of their revenue in order to have these deals flowing. And does that set a precedent for other companies that are looking to do business into China or elsewhere? This would be the first case that really can recall in a very long time of an export tax. And certainly there are questions even over the legality of it. Is it actually allowed and something that would legally be acceptable or could be challenged and by other companies also? But it could suggest that this is maybe a playbook that could be emerging for Donald Trump for other companies also. And we've seen it really in the array of developments over the past couple of weeks, be it with Apple or others. You know, if you bring manufacturing, for example, back to the US, if you pledge money, you'll get lower penalties, or you'll get, in fact, no penalties whatsoever. So it's very, very personal. It's very based on individual companies as a template. And it's very difficult for companies, therefore, to work out which is the thing that they're going to get in all of this. But certainly this is a very unusual move, and it would better be seen, actually, whether it would actually get through and be allowed to take place.
Yeah, I imagine, as you think, Ross, like, you know, the other corporates are thinking, what does it mean for us? Beijing is probably thinking, again, longer term implications of this. Susan, what does it mean for EU negotiations on trade?
Well, look, the EU is looking closely at this development, as it is doing to everything that's coming out from Washington. Now, there is some optimism here that the European Union is protected from any of these new measures, new arrangements, because it did 2 weeks ago lock in that 15% on reciprocal tariffs, and it believes that 15% is set in stone now. So, for example, last week when Donald Trump announced a 100% tariff on semiconductors, with this big exception for companies that manufacture or manufacturing that happens in the United States, the Europeans were very quick to say, look, we're not included on that. We've already got our 15%. Similarly, we're expecting future statements by Donald Trump on pharmaceuticals, and the European Union are saying that they're covered by that 15% when it comes to pharmaceuticals. However, the reality is that we are still waiting for a document, a joint declaration between the United States and the European Union. It still hasn't been forthcoming. The White House did issue executive orders setting out some of these terms that it agreed with the EU, but not everything. Similarly, we are expecting, and we're still waiting for some kind of a statement from the White House about cars and other sectoral tariffs. So it is by no means finished when it comes to the EU-US trade deal. But as I say, European Union negotiators are confident that 15% rate is pretty much there to stay.
And Roz, we're also getting, of course, you know, a little bit of noise on soybeans and China. Is there an agreement? Are we near an agreement between the US and China?
Well, our understanding is there isn't currently an agreement, but there could certainly be one. And Donald Trump was floating that, saying that he'd like China to buy a lot more US soybeans. But the timing is interesting because we're coming, obviously, to the rollover of the US-China trade truce. We're also coming weeks before US farmers harvest their soybeans. So they're going to have a lot of soybeans to sell. And so basically he's saying to China, you know what, if you're willing to buy some more soybeans, that would really smooth the way for the rollover of this trade truce. And it's in interest of the China potentially to do so. They do need to buy a lot They've been diversifying their sources of that, which has made sense strategically from countries in Latin America and so on, but they don't have to buy them from those countries. They can easily buy them from the US, and at a good price it makes sense to do so, both for farmers in the US, for businesses in the US, but also strategically to keep things on an even keel, because of course we're all building potentially towards a meeting between Xi Jinping and Donald Trump later this year, the sense of can we get to the point where they are going to have a proper summit. And so China's sensing the mood on that. This is Donald Trump floating it as a possibility, and it's an easy win really for China just to meet him halfway on it.
And Suzanne, what do we know about the Trump-Putin meeting in Alaska on Friday? I mean, this is a big deal. Oil is actually moving on the back of it. Putin, though, wants Ukrainian land.
Yeah, look, this is a big week for Ukraine. That summit taking place now on Friday in Alaska between Donald Trump and Vladimir Putin. The Europeans, the EU, is holding an emergency meeting of foreign ministers this afternoon. Now, that will be a virtual meeting by video conference, not here in person in Brussels. But it speaks to the urgency with which Europe and a lot of actors are viewing this development. As you say there, Mark Rutte, the NATO chief, confirmed over the weekend in an interview with the US media that, the issue of territory here is going to be on the table in some way. Now, whether this is Ukraine acknowledging in some way some of the land it sees as temporarily lost without ceding sovereignty, but this issue is likely to be the key focus of the meeting on Friday. Now, the Europeans are not going to be at that meeting. I don't think there's any expectations they will be. However, there's still hope, and I think Europe is pushing for this, that Volodymyr Zelensky, the Ukrainian president, will be included in some way. They're also pushing, we reported on Sunday, to be able to speak to Donald Trump before that meeting, the main European leaders, if you will, to have some kind of conversation with Donald Trump to kind of set out some of its demands or its wishes ahead of this meeting. But generally a big week for Ukraine, and all eyes are on that Friday summit in Alaska.
Thank you both for a terrific briefing on this Monday morning. Rosalind Matheson, our EMEA News Director, Suzanne Lynch, our Brussels Bureau Chief. Now let's also bring Subitha Subramaniam, Head of Investment Strategy at Sarasin and Partners. Subitha, we'll talk a little bit about oil and Alaska in a second, but overall, look, trade, it's unclear exactly where we are, given the ongoing negotiations. I think there's a lot of relief maybe on the markets that at least we've had that hurdle. The kind of deadlines have passed, but how do you see it developing further?
So I think there's more certainty now than there was, say, in the months after April 2nd. But if you step back and you say, well, on April 2nd, the average effective tariff rate in the US was 28%. Now we think it's about 18%. And actually, if you think about what's happened with India, with Switzerland, there is no certainty that actually it stays at 18%. If anything, I think this is sort of a universal tool that President Trump and the administration really will come back to. So I believe that 18% is the baseline going forward. And businesses and everyone else will now start to optimize around this 18%. But I don't think we can take it for granted and that it will stay here, because it actually, from the administration's perspective, it's been quite successful. It's bringing in heaps of revenue from their perspective, about $350 billion now at the current run rate. So I think they will, I suspect, be tempted to go back to this well repeatedly. Mm-hmm.
But is there a concern, again, that markets just seem to be ignoring it completely? I know partly it's driven by tech. But actually, does it make sense to you that the economy, we're seeing question marks on the labor market in the U.S., on inflation, but actually the market is just roaring ahead?
So I think Mary Daly, the president of the San Francisco Fed, had a fantastic analogy. She said, U.S. households and businesses seem to be standing at the edge of a cliff, and they have this amazing view, and they think everything is fantastic. AI is going to bring in this huge amounts of productivity improvements. The U.S. is getting a lot of tariff revenue. It's righting its relationships with the rest of the world. But actually, there's a sort of there's a sense of sort of insecurity, and there's a fear that actually the rocks under your feet might give away. So it is really a complicated feeling that, we're very comfortable with what we see, but we're not quite certain that it's actually going to last. So, and I think markets are a bit like that.
Yeah, and it feels like we still don't know exactly how exporters are going to behave, right? Whether they absorb some of the costs and then see 5-6 months down the line, or whether they just pass it on to consumers.
Yeah, and I think history tells us, and there's no reason to say every economic model is broken. I think generally tariffs will get passed on to U.S. consumers. It's really a consumption tax on imported goods. Right now, American businesses have actually absorbed a huge amount of the tariffs. They basically said, we don't know what the end number is going to be, so we're just going to take it on our P&L. But now that they know it's roughly 18%, the sort of landscape is fairly more certain than it has been. I think they now start to pass it on to the consumers. So eventually, inflation has to start picking up. We've started seeing the early signs of inflation in last month's inflation data, and I think now we get that this week, and I think we'll start seeing more of it.
So does it matter? I mean, there are many questions, I guess, that we'd all want the answer to. It's inflation. It's what happens to the Fed in U.S. China. But is it likely that we get a cut from the Fed in September? Also, given the labor markets, despite inflation creeping up.
Yes, so I think we have an environment of sort of a whiff of stagflationary pressures starting to come through. So now we're starting to see the first signs of inflation in imported goods. Yes, inflation in housing is starting to moderate, as every model told us it would right about now. But, goods are starting to pick up. Businesses are now saying that they will pass on prices to consumers. And at the same time, the growth is looking quite, it's starting to bear the impacts of all this uncertainty, the labor market crackdown. So I suspect, and I think the Fed has sort of signaled that September 25 basis points is pretty much on the table. The real question is whether they go larger. We've had Stephen Myron, who's been nominated as the new Fed governor to the board now. He's only there temporarily, but I think he is a fairly sort of, credible and respected economist. He's not really a policymaker, but, for long anyway. And he will, I think, change the nature of the debate at the Fed. I suspect he'll push as Waller and Michelle Bowman to push for a 50 basis point cut. He could dissent with a 75 basis point cut as well. So I think this idea of a cohesive Fed, which is starting to break down, also starts to sort of enter the market's narrative.
I mean, Stephen Myron is also the architect of the Mar-a-Lago Accord. Subitha, give me a sense. I mean, if there's a 50 basis point cut, does it panic the markets because it looks like it's an emergency? Or is it the right thing to do and then see what happens in the coming months? Stagflation, let's just remind, is an absolute nightmare for anyone to deal with it, but especially the Fed.
Yes, so I think we have the summit, the Jackson Hole summit at the end of August. So I hope that at that point, if there are a number of members of the Fed who are seeking to change their position, they telegraph that quite carefully. And they have a clear sort of narrative as to why they would move more aggressively. The arguments could be very simple. Waller has already said that, he believed that we should have cut rates at the last meeting. So he would say, we're going late. So now that we're going late, let's just reset at a lower level. There's no reason to panic. We just need rates to be more at neutral levels when the economy is growing at about 1%.
So, Subitha, I mean, the other thing is U.S.-China. We don't talk a lot about China, or we haven't in the last couple of weeks because there's just been so much going on. But where do you expect the U.S.-China relationship to go? It feels like China could get a better deal than than Switzerland, for example.
Yes, I mean, I think many people say that Trump is the most dovish person amongst his cabinet with regard to China. I think that the game with China is quite different. It is to create strategic uncertainty. So if you think back to 2000, what really mattered was that China entered the WTO, but also American businesses realized that they now have a very stable and predictable trading regime with China. Now what Trump is going to do, possibly, or the administration, they'll just push forward this deadline. Another 90 days, we can get some element of certainty for 90 days. And then we're back to the drawing board. So if you're a business, you're going to think, okay, if we do this 3 or 4 times, it's just really insecure. And you really start to pull back your investment decisions, your supply chains. And I think that's really the ultimate objective, is to just make China more unreliable as a source of supply.
Subitha, what have you learned about the Trump administration so far? I know it's difficult. People say, well, look, it's the art of the deal. Does AMD, Nvidia actually show you that it's the art of the deal, that they just want revenue coming back to the U.S. almost at any cost? Or is it that, it's very uncertain because there are different factions also wanting different things?
I would say the number one sort of learning I have from the administration is that they really want to leverage American power globally in every aspect. If you have access to the U.S. market, you need to pay an access fee, which is your tariff. If you want American chips, which are the best in the world, you have to pay a tax to access that. So it's really trying to extract as much. And they said that pretty clearly before they came into power, is that, the U.S. administrations over time have really ceded power of the American economy to the rest of the world. And they just are going to extract as much as they can from the rest of the world. But I think this is not just a one-step game. I think it has effects. It has domino effects repeatedly across the rest of the world. And other countries will react. Of course, they pay the tariff. Of course, they don't retaliate because it's not in their interest to retaliate. But I think over time, the rest of the world does have, they start to protect themselves by reaching agreements amongst themselves, by becoming much more protectionist themselves. And so it's not necessarily, what we see today or the next 12 months, that's not the end of the game. I think it sort of plays out over, many, many years.
Subitha, thank you so much for joining us. Subitha Subramaniam there, Head of Investment Strategy at Sarasin and Partners. Now, coming up, the Chinese battery giant CATL announces the suspension of a major mine, sending lithium prices soaring. So we'll also have the details on that next, and this is Bloomberg. Well, the conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, Chinese battery giant CATL has suspended activity at a major lithium mine in China. Now, we understand that the closure could last at least 3 months. Now, for more, we're joined by Bloomberg's global autos editor, Craig Trudell. He's the autos editor, but really he understands every component that also goes into batteries, which is why we're talking to him about lithium. So first of all, Craig, thank you as ever for coming on. But how significant is this temporary suspension of lithium? Is it temporary?
Yeah, I think the answer to that, we don't know at this point in terms of whether this ends up being permanent or it's just a matter of a few months. But in terms of the significance, it is substantial that this is one plant that accounts for something like 6% of global output. And it raises all sorts of interesting questions about, whether this is the first of many suspensions, given this sort of clear signal that we are in a state of severe overcapacity where, one plant going down leads to this dramatic move up in prices that have been so depressed for so long.
So what is this retaliation or is this actually overcapacity?
I think this is a matter of a clear case of state control of an industry that is seen as extremely important. And depending on how you look at it, it could either be a sign of, victory or defeat, right? In the sense that it is clear that China has an absolute stranglehold over this material. Yeah. It is absolutely crucial to EV batteries. And we're now in a situation where China is so dominant with so much production of sort of every aspect of the supply chain that if and when it does make these moves, it has these broad-reaching ramifications for the rest of the world. Now, will this actually will we feel this over here in Europe? We haven't necessarily seen a dramatic come down in prices for EV batteries here, but we have seen it in China. So I think it remains to be seen whether we see, maybe some incremental move in EV and battery prices for the rest of the world. I think for the time being, we can sort of count on this being mainly a domestic story.
Craig, thank you so much. Craig was also telling me actually about drones flying, so we'll have to get you back to talk about that. This is the lengths, actually, that a lot of traders go through to understand the dynamics of lithium. Craig Trudell there. Now, the Israel Prime Minister Benjamin Netanyahu has defended his plan for a new military offensive against Hamas strongholds in Gaza, calling it the best available option for recovering hostages. The plan has drawn condemnation from foreign powers and vocal opposition at home. Let's bring in Ethan Broner, our Israel bureau chief in Tel Aviv. Ethan, so what's been the response from inside Israel to this latest move?
Morning, Francine. I would say that there is a lot of resistance to it. The right thinks it's not enough. The left is horrified and feels that the war has gone on long enough. Enough people on both sides have died. Hamas has been degraded enough, and that victory should be declared and something else other than a military going forward should happen. That said, I think that the plan is still real. And we'll see also the business community is starting to play a role in trying to oppose it. But it's got difficulties because its workers, many of them actually do support the plan.
Israel has become isolated. Does this bring even more isolation after a lot of the critics say, of course, Gaza has already been all but razed to the ground?
Yes, I mean, of course, I guess it's partly a question of what isolation means. I mean, nobody has ended their diplomatic relations with the country. They're all yelling at it. They're telling it to stop doing it. They're expected in growing number of countries, already 147 countries, recognize a Palestinian state. Several Western key allies say they're going to do the same thing. Australia just announced that today. Yes, I mean, its plan is not being embraced anywhere. I think that there's no question that it's not going well diplomatically. On the other hand, the argument of this government is every time we win, people come back to us, and we're going to win this one too. I wouldn't say that there's a lot of agreement about that here, but that is the argument of the government.
Is there an exit strategy if Israel has so few supporters?
I think Israel's exit strategy is that it's going to take Hamas apart. It's going to do what it has to do. It's going to remove whatever it can in terms of Hamas infrastructure. It's going to bring home whatever hostages it can. And then the world is going to say, oh, I see, that worked out. And that's going to help them install a non-Hamas, non-Palestinian authority into governing the place. Whether that's going to happen, I can't tell you, but that is what Prime Minister Netanyahu said is going to happen.
Ethan, so I was going to ask you, what does this later operation mean for the hostages, but also where does it leave negotiations to end the war?
So the argument of this government is that the more military pressure they bring on Hamas, the likelier Hamas is to come back to the table and negotiate a deal. There's not a huge amount of evidence to support that argument, but that is its argument. So there is an attempt underway to restore those negotiations. It's not very clear if they're going to go anywhere. I think that the hostages, the Israeli argument has also been that we'll do what we can to get as many of these hostages out as possible. And eventually we're going to have to do, because the most important thing for us is to destroy Hamas. That's its argument. That's how it's proceeding.
Ethan, thank you so much for the update. Ethan Broner, our Israel Bureau Chief. I would also suggest everyone to read Mark Champion's opinion piece saying, of course, that the implications for Gaza and its residents, no matter how you see it, are simply appalling. Now, coming up, why Trump's tariffs are spurring on investments in emerging markets. We'll dig into that next with Yacov Arnopolin, Portfolio Manager for Emerging Markets at PIMCO. We'll have a full roundup of our top stories today. Of course, lithium market soaring as CATL shutting one of the world's biggest mines has a big implication not only for EV makers. The other thing we're watching out for is how Nvidia and AMD go from here after agreeing to pay 15% of their revenues from Chinese AI chips to the U.S. government in a deal to secure export licenses. I think it's the first deal of this kind. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Well, Nvidia and AMD agreed to pay 15% of their revenues from Chinese AI chip sales to the U.S. government in return for export licenses. Lithium prices spike after battery giant CATL halts operations at a key mine in China after failing to get a permit renewed. And the NATO chief Mark Rutte says negotiations about Ukrainian territory may be on the table as President Trump and Vladimir Putin prepare to meet. Now, despite President Trump's imposition of global tariffs, sentiment towards emerging markets appears to be on the up. Investors busy adding exposure as 2025 shapes up to be among the best year for EM returns in the past decade. Well, we're now joined by Yacov Arnopolin, Portfolio Manager for Emerging Markets at PIMCO. Yacov, thank you so much for joining us. I mean, we did start the year in saying, look, I think you also last time came on and said, there could be a little bit of concerns for some emerging markets depending on how the Trump administration does and what they put in place. Now they seem fine or better.
It's such a nice to be here and not have to defend emerging markets. We're actually, if anything, rather than crisis to crisis, we're going from strength to strength. And I think on the back of that, we're seeing this really surge in interest in terms of EM investing. And a lot of it because feels like we're in a bit of a virtuous cycle for emerging markets, where because of the travails of the US dollar, volatility has dampened among EM rates and bonds and currencies. So obviously better Sharpe ratios. And we're witnessing some of the best returns for EM this year of the past decade. And traditionally, we've in the past few years, investors have really been underallocated, underweight to the asset class, and now they're busy adding back exposure because of this virtuous cycle that we're witnessing.
I mean, when you look at the tariffs, some of them got quite hard hit by Donald Trump and the Trump administration, but were they managed? I mean, is it because they're more structurally sound than they were 3-4 years ago, or is it also because he's been much harder on some of the developed countries?
I think it's a mix of the above. It really is. It would surprise us as well. I think the initial reaction was when one takes out our macroeconomic textbook, and back in April, Economics 101, in my case, it was written by Ben Bernanke. That's the one I read in Carnegie Mellon. One would anticipate a weakening of the currencies to resist, basically to offset this shock. And yet, I think because of the concerns about U.S. policy and generally this allocation away from U.S. assets, or I would say kind of diversification away from some of the U.S. assets, we've actually seen this strength in EM. And again, as we speak to our investors, let's say pension funds that do their SAA, the Strategic Asset Allocation Plan, our sense is the U.S. will remain very important. Right? It's still a core allocation because of the tech sector and so on and so forth. But the incremental unit of risk, maybe the incremental euro or yuan of investment, I think a chunk of that will go into EM on the back of some of the recent noise. And I think back to tariffs, generally speaking, we have to recognize tariffs certainly are higher than they were pre-Liberation Day, but not as draconian as what was announced back then in April. So generally, it's been fairly muted. We say that 10% is the new 0%. The exemptions are Brazil and India. So we're still watching those quite closely. There's a little bit of a political angle there.
I mean, Yacov, India for me is actually quite strange because he also personally gets along with Modi, right? They're allies. So does it mean that it's a deal or finance above anything, or is it just negotiations?
Our sense is there's a deal to be struck at some point. India has intervened heavily in the currency to offset some of the pressure. But generally speaking, when we think about the really attractive opportunities out there, I still think it's more in the local space. Countries like South Africa, countries like Peru, where they've done well, but we go and we re-underwrite the thesis and they still look quite attractive. Very steep curves, very solid monetary policy. South Africa changed their inflation target to 3%. So a lot of interesting things for us to do out there. And actually linking it back to your comment earlier about the lithium situation overnight. When I think about the biggest lithium producers out there, China #1, then Australia, Argentina, third biggest producer, that's really trying to actually, it's already big, trying to increase that production around Vaca Muerta over the next few years. It's also structurally some very interesting tailwinds there.
But so I'm surprised. I mean, I'm not surprised because you always usually pick the right countries. But in terms of preferred exposures, Colombia and Angola. I mean, these are two very different countries with also exposure to very different industries.
Absolutely. Look, I think it comes down to always valuations. And what we saw back in April after Liberation Day, there was panic in the market. Now, oil prices dropped, so people were selling Angola, with their eyes closed. We re-underwrote the thesis. We looked at the balance sheet, felt this was a very attractive investment. So we really were buying some of these short-dated bonds at bargain basement prices. They've recovered, still looks attractive. We've taken profits a little bit, but still involved. Colombia, same story. Still find a lot going on there politically. Political transition may be beneficial for bond prices. And one other country that's worth mentioning is Mexico. Some very interesting, very attractive opportunities in their fixed income recently as they've sought to bolster the state-owned enterprises. That's what's created some really interesting bond investments.
Which is surprising, right? Because Mexico and Canada actually, because of the proximity to the U.S., were the ones that we were worried about at the beginning. Do you now have a better understanding of what the right way of dealing with Donald Trump is? And also looking at dollar dynamics?
I think we focus on the fundamentals, and the fundamentals come down to, in Mexico's case, is USMCA, which is the old NAFTA. So much of the trade is covered under USMCA, and on the back of that, although there are certain areas that have much higher tariffs, the vast majority of the trade is still USMCA related and consequently practically tariff-free.
When you look at some of the things that you prefer, actually, your favorite longs in local rates, Peru and South Africa, Again, South Africa has a lot of, I guess, short-term concerns that they're having, including the blackouts.
Yes, getting somewhat better.
Yep.
So a long history of blackouts, brownouts that have actually been improving. There as well, when we look at growth has not been very impressive. Inflation has been going down. And again, that's where kind of the dichotomy between what may not be great for stock markets or where growth is poor, that's a great opportunity for us in the fixed income space where the bonds can do well, bonds can rally, and low inflation, obviously very, very positive for us. And I think another topic where we can find uncorrelated returns and where I think this is kind of, again, very benign environment are frontier markets. So going from South Africa a bit northwest to Nigeria, where frontier affects frontier currencies, that's one of our favorite bets, favorite views. And then further north, Egypt and Turkey. Again, these frontier names that can continue to do well and generate alpha for our investors.
Yacov, is there a worry that actually, given the uncertainty on tariffs going forward, that actually for the moment we feel, right, we've gotten the hurdle? I love the fact that you say 10% is the new zero. What happens in the next 6 months? What if there's a sizable shift? Do you not worry about it at the moment, or do you try and preempt?
As a fixed income manager, always worried. And frankly, we took some of our risk down in the past few weeks, specifically as we saw the rally in credit, in sovereign credit, corporate credit, in developed markets, in emerging markets. So around June, July, we started to take chips off the table, reallocated some of that into local assets like rates and effects that I mentioned, because we find there is more risk premium, more attractive risk premium there. But generally, feel comfortable we have dry powder to deploy. And in the meantime, have to remember, the base case is for the Fed to cut rates, September, December. And that should help, cushion markets.
Does it matter if it's a 50 basis point cut in September from the Fed?
There is a lot of data still to come out between now and then. So we have 2 inflation prints. We have the jobs print for August that will come in September. So TBD. But certainly our sense is it's most likely 2 cuts, and there is upside risk to that scenario.
Okay, Yacov, thank you so much for joining us. Yacov Arnopolin, their portfolio manager for emerging markets at PIMCO. Now, President Donald Trump is continuing his push for U.S. tech companies to focus on domestic production and investment. Well, Bloomberg has learned that Nvidia and AMD have agreed to pay 15% of their revenues from Chinese AI chip sales to the U.S. government. It's a move that may unnerve both U.S. companies and Beijing. Well, joining us now is our very own Tom McKenzie. Tom, nice to have you back. What does this signal in terms of Trump's intentions?
Well, it's a reminder, of course, that President Trump is willing to lean on and pressure companies, whether it is in terms of tariffs or indeed what is now looking like an export tax. It's pretty unprecedented to see a corporation being told that it had to pay 15% of its revenues in terms of its sales into a market like China, into the US Treasury. But that appears to be what is now at play for both, as you said, Nvidia and AMD as they sell those chips into the Chinese market. The quid pro quo is you can get access, you'll get the license, but you have to give us 15% of the revenues of the sales into that market. It's a reminder as well that this continues. We saw Apple committing to $600 billion in terms of its investments in the US market. To your point, a president and a team around the president determined to pressure these companies, US corporates and others, to invest in the US market or to put money into the coffers of the Treasury, even if it is pretty unprecedented. There's a broader picture to this as well in terms of what this means longer term for US Inc. and US corporates as they think about that dynamic, the political dynamic now with the Trump administration. The Chinese, by the way, response to the H20, which is the chip that was blocked by the Trump administration, is now allowed in if indeed you manage to get that export license for that fee. The Chinese reaction is increasingly sceptical, and we've been hearing that from reports linked to state media. They are concerned about what they describe as security concerns linked to these AI accelerators. We are yet to hear an official response from Beijing, but of course we know that this is in the context of US-China talks and that deadline tomorrow, of course, which could be extended, and that has been the hint, the suggestion from the Trump administration.
Tom, how much pressure is the Intel CEO now under?
Significant pressure. Lithium, of course, President Trump came out and said that he should step down because of conflicts of interests, as the president describes it. We know, according to the Wall Street Journal, that Lithium will be heading to the White House today to meet with President Trump, according to that reporting, for extensive conversations where he's expected to make the case for his own history within the semiconductor sector of the US. He is, of course, a US citizen now, previously a Malaysian citizen, but he's worked and lived in the US for more than 40 years. He's expected to drive that home with the president and also explain some of his business and investment ties that apparently and appear to be causing concern for President Trump. That, of course, at a time when Intel and the strategy that Lip-Bu Tan is pursuing as the CEO of Intel is causing some concern amongst the board as well. And you've yet to see, of course, a significant turnaround in that company. So we'll see what comes of those conversations between the president and the CEO, of course, of that major chip maker.
Tom, is Palantir the canary in the coal mine when it comes to AI valuations?
Well, if you look at the valuation, I mean, Palantir up to 2,500% since its listing in 2020. It's up 150% year to date in terms of the earnings, 245 times forward earnings, 245 times forward earnings. You compare that to Nvidia, which is about trading at about 35 times forward earnings, then it does look very, very richly valued indeed. But it's come on the back of a number of catalysts for a company. It's lent in, of course, to its AI. It's built that into its products. It's got a very close relationship with the US government's benefiting from some of those contracts. And, of course, it came through with that blockbuster earnings report as well. So those are the catalysts. But some will be looking at this and seeing maybe this is a little stretch too far. Bloomberg Intelligence saying that they'd have to turn around revenues in the next 12 months of about $60 billion US. The forecast for next year are closer to about a tenth of that.
Tom, thank you so much. As always, Tom McKenzie there with the very latest on some of the chips and all of the tech stories that we're watching out for. Now, shares in Danish company Ørsted have also plunged after it said it will conduct a rights offering to raise as much as $9.4 billion. Now, the capital raise by the world's biggest offshore wind developer comes in response to President Trump's policies to limit offshore wind development. Ørsted has blamed the policies for derailing its ability to sell stakes in projects it's already building in the U.S. Now, coming up, Kyiv and the EU reject any giveaway of Ukrainian territory ahead of President Trump's summit with Vladimir Putin on Friday. We'll look ahead to that meeting next, and this is Bloomberg. Now, political maneuvering has begun ahead of this week's meeting between Presidents Trump and President Putin to discuss Ukraine. Now, sources say EU nations are seeking to meet the U.S. president before his summit on Friday, after President Zelensky and EU foreign policy leaders both rejected the idea of allowing Russia to occupy Ukrainian territory. Now, the NATO Secretary General Mark Rutte has warned that he believes the U.S.-Russia talks could or may open the door to negotiations on Ukraine territory. Now, we're now joined by Mark Champion, who covers international affairs for Bloomberg Opinion, and Stephanie Baker, our senior writer. So, I have many, many questions on this because, Stephanie, there was talk about a summit like this a couple of months ago when, President Trump and President Putin were very chummy, and then that relationship soured. So what could come out? And now they're friendly again?
Well, I think this is what Putin wants, is to reestablish that relationship, that friendly rapport that he had. This summit in and of itself is a huge political win for Putin. It brings him out of isolation onto U.S. soil, even though he's sanctioned. And Zelensky is not at the table. So usually these summits require months of preparation. So this is incredibly rushed. Usually they go in with an agreement ahead of time that the leaders just sign. Yeah. That's not happening this time. I think if you're trying to look for parallels, I would look at the summit that Trump had in his first term with Kim Jong-un of North Korea. He really wanted a nuclear deal out of that, didn't get one despite a couple of meetings, and ended up walking away, but I think he still spun it as a win. Yeah. So I think there is a real danger that Trump gets played again and Putin succeeds by changing the narrative and trying to cast Zelensky as the problem and the obstacle to peace rather than him.
Yeah, it feels like if it is actually like that meeting with Kim Jong-un, it was a photo op, right? It was kind of like we covered it extensively. It was pageantry. It was quite impressive to see the two leaders walk together. And I remember the car. Mark, what are you expecting out of this? We're now, I was surprised about the NATO Secretary General also saying, well, we should maybe talk about Ukraine giving up territory, especially if President Zelensky is not at the negotiating table come Friday in Alaska.
Well, I didn't quite interpret what he said as that. What he was, there are two ways of thinking about territory, or even more. But, what he was everyone understands, including the Ukrainians, that they are going to have to, in some kind of deal, they're going to lose control of territory. What they're not willing to do is to offer de jure to give away territory and say, this is now Russia. And so Zelensky has been very clear on that. Rutte, I think, was trying to make that distinction and say, well, we're going to have to talk about giving away control of territory. But didn't really, wasn't saying, they have to, de jure give it away.
Yeah.
So there is some, and from what, President Trump has said, he's talking about, we're going to talk about land swap. The fear for the Ukrainians is going to be that, what's being offered to swap is that the Ukrainians would have to give up parts of the Donbas region that Russia has not yet succeeded in occupying. And then in exchange, the Ukrainians would, the Russians would have to give up territory that they have not yet occupied in Kherson and Zaporizhia. So it's a kind of something for nothing deal on the part of the Russians. It also doesn't, there are no guarantees, no matter what they sign, that they won't, simply go further later, say that there's, someone's broken a deal. After all, they signed guarantees, back in the 1990s that they would never do exactly what they're doing now.
So, Stephanie, what does Putin want to get out of this?
He wants to reestablish that relationship that he had with Trump beforehand, and I think he is hoping to work his KGB charm with Trump, flatter him, and I think he would like an even broader agreement with him on a whole host of issues, convince him that these demands that he's had all along about Ukraine, that Ukraine can't join NATO, there should be caps on Ukrainian military, it should be neutral, and that Ukraine is part of Russia's sphere of influence. I think he would like this to be a kind of Yalta agreement, carving up their spheres of influence. I think for the Ukrainians, they're really worried since they're not at the table. This is more like a modern day Munich, where they're going to be forced to hand over territory against their will. And this land swap, remember, Trump's going in. He's not really equipped to do the detailed negotiations on a land swap. And the details matter. And the theme running through all the conflicting reporting over the weekend was that was the one thing that Putin wanted, was control of the area of Donetsk that the Russians have not been able to take because it's heavily fortified. And if they hand that over, that leaves Ukraine really vulnerable to an additional attack from Russia down the line, where Russia could take further bits of Ukraine near Kharkiv and elsewhere.
Yeah, how do you see this going, Mark? Again, I mean, we all think about also President Zelensky showing up at the White House and basically being ambushed. So could this be a repeat of, the friendliness between Putin and Trump, with Zelensky and, frankly, the rest of Europe being frozen out?
I think there's a very high risk. That is what, Zelensky is clearly very worried from the things that he's been saying. The Europeans are worried from the things that they're saying, and I think rightly so. So if you look at what Trump has actually done since he came into office, there has, his default very much has been, I want to make a deal with Russia. I want to make a deal with Putin. I want to regularize relations between the U.S. and Russia. I want, economic benefits from that. And, getting some kind of deal in Ukraine is the kind of, the gateway, the door that has to be open to get there. He hasn't been able to do it. He's been very frustrated. And for Putin, the very clear thing that he wants to do is to prevent, Trump from being so frustrated he actually starts to do stuff that hurts Russia. And all he has to do is this kind of thing, which is to appear a little reasonable, to show up for talks, to give the photo ops that Trump wants.
Stephanie, I mean, there was also talk about these secondary sanctions on basically any country that bought Russian oil, but it seems to have, gone away apart from India. That could be getting in the neck.
Right. So I do think, for all his bravado, Putin knows that his economy is in a terrible state right now, and he is running out of time to be able to finance the war in the way he has up until now. Russian oil revenues have come down, and this threat to impose an additional 25% tariff on India for buying Russian oil, which only comes into effect in a few weeks, that would hurt Russia. Even if India, for instance, just reduce the amount of oil that it was buying from Russia, that would hurt Russia. And I think that is one of the factors that is driving him to the negotiating table. Of course, Trump has let that Friday deadline come and go without any action. But that threat remains. And I think Putin is worried about, additional restrictions on Russian oil.
Stephanie and Mark, thank you so much. Just a terrific briefing as we look ahead to Friday in Alaska. Mark Champion from Bloomberg Opinion, Stephanie Baker, a senior writer who also has a fantastic book out, Punishing Putin, that you can, everyone should read, but you can pick it up at your local library. Oil lower today as key U.S.-Russia talks come into view and ahead of tomorrow's U.S. CPI print. Let's bring in Christine Aquino, managing editor for our Markets Live team. Christine, so good to have you in London. What can you tell us about oil?
Yeah, thanks, Francine. I mean, oil definitely kind of in the front lines in terms of the market reaction to the potential Russia-Ukraine talks, and we are seeing a pullback there. And really, it speaks to this geopolitical risk that has played for oil for much of this year, right? I mean, it still remains very much a demand story, a lot of worries long-term over what consumers are feeling, a little bit less optimism there for the second half of the year. But geopolitical risk is something that has reared its head repeatedly for oil prices this year. We're seeing that again this Monday with a pullback in oil. I think questions again over how long this effect can last, because as Mark and Stephanie have highlighted, a lot of questions still over the outcome of these potential Russia-Ukraine talks and what each country can stand to gain from that. And so a lot of questions for investors as well in terms of longer term direction. But as of now, it is a clear negative for oil prices to start the week.
Yeah, Christine, also a lot of focus on the Fed. Now possible talk about a 50 basis point cut, whether it's seen as an emergency or not in September. So before that, we'll get U.S. inflation and then all of this stagflation worry creeping everywhere.
Absolutely, Francine. I mean, the expectation for this latest CPI print, of course, is again a creep higher in that year-on-year CPI number to about 3% now. And that's been kind of the story, really, for this print. There was a lot of relief in the first half of the year, especially with talks of tariffs kind of coming to fruition, but then not really seeing that as a reality. And so, CPI prices not necessarily reflecting that. But now that tariff discussions are back to fore, and again, questions on the growth side of the equation with that terrible jobs print that we just saw, the Fed definitely leaning more towards supporting growth at the moment. And we are seeing talks of more rate cuts. At the moment, markets aren't necessarily buying it. We're not fully priced for a rate cut of even 25 basis points in September. But I think tomorrow's CPI print will definitely go a long way in informing markets or maybe changing the equation for rate cut expectations.
Christine, thank you so much. As always, Christine Aquino, their managing editor for our Markets Live team. Now, this is a picture across the board. A lot of things going on in the space, of course, of markets. The main focus is what's happening in oil because of the U.S.-Russia talk in Alaska on Friday. But stocks are racing a lot of their gains. Again, a lot of traders seem to be dialing back optimism that a summit between Trump and Putin would bring the war in Ukraine closer to resolution. The other thing we're watching out for actually is Bitcoin approaching an all-time high, supported by strong demand for institutional investors, but also corporate buyers. Up next, Bloomberg Brief, and this is Bloomberg.